good day, all. Ira Epstein, and here's your weekly edition of your financial market wrap-up. We're going to look this time at weekly charts. We do that each weekend for this Sunday, the 16th of March, 2025. And what an interesting week it was. And we have some news coming out on Monday. So let's first go to that. Monday morning at 7:30, you're going to get the New York Empire State Manufacturing Survey for March. At 7:30, you're going to get the February advanced retail sales data. At 9 o'clock, the National Association of Home Builders will give us their market housing index. And at 9, we're going to get January business inventories. As you know, this is the week that we're going to also get the Federal Reserve's going to have their two-day meeting. We'll get a dot plot. I think the dot plot is what everybody will gear up on, get an idea is what the different members think. Are they thinking 2 cuts this year still? Are they thinking 1 cut, no cut? Where are they? And in June, there's going to be another one of these dot plots that you'll be looking at. And that's the one where we'll have seen the impact of the tariffs, because the reciprocal tariffs all go into place around April 2nd. I use the word around because we don't know how fast they'll hit, who they'll hit, the amounts they'll hit for, and what it does. We've already seen what's happened between Mexico and Canada with the United States. We're already seeing Trump throwing out 200% tariffs on European spirits. So it's very important that we take a look and see what this all is. On the war front, the big question is, can President Trump get Putin to the table for a meaningful talk about a ceasefire? I don't think you have to do a truce at the beginning. I think a ceasefire is going to be the conditions that you can make a move on, and we'll see what that does. As you can see, Hamas and Israel continue to go at it, and Israel's picking up the momentum of attacking them again. Hamas thinks they have cards to play. They have no cards to play. And the Houthis are now testing President Trump's will, very different than Biden. And we will see just what happens over the weekend. You've already seen President Trump tell Iran, you get involved, you start shipping more, we're going to look at you and look at you real hard right now. He's threatening an attack there. So first thing they're going to do is they're going to take on the Houthis and see how they can control that situation in the Red Sea. Now, what we saw on Friday was pretty clear. It was short covering going into the weekend. Traders saying, okay, we've had a big break. Let's see what we can do. And it was a sea of green. I won't put up the board. I don't think it's that important. But what you can see is for the week, you were down, for the month, you're so far down 5.42%, 323 points on the S&P. For the week, you were down half of that amount, nearly 2.35%. You can see how you've broken through everything. This is a close-only chart. So it is not a chart that I'm looking for what was the high. Closes only to give me a feel as to what the market's doing. This is the weekly bar chart that shows the absolute highs and lows along with the open and the close of a week. And you can see how the market is broken through. If you'll recall, I have been talking to you in the past 3 weeks where I said, we're up here. This is a consolidation zone. Is the market going to be able to lift or not was the big question. There were many objectives put out at the beginning and the end, beginning of this year, end of 2024, that were looking for the 6,000 plus area. And they got up nearly to 6,200, which was a pretty common number that I saw amongst the analysts. I am now seeing different brokerage firms over the weekend start lowering their year-end focus. So that is important, I think, to see as this goes on. You can see how the market broke down, and once it got through this low, and that was the week of March 7th, the market just didn't look back. And that's where you're at right now. When we take a look at the swing line on that, you have a pattern of a higher high and a lower low. That is not a trend. Yes, you have a vertical price break, and it's been very nasty, but a trend is typically, by the parlance of chartists, lower highs, lower lows. That is not what you have here. the way that at least I measure it with my swing line. The market is under the 18-week average of closes, so the bias of the market is certainly down with a vertical price drop. One of the potential stopping spots could be the Bollinger Band, which you went through last week and this week. So yes, if you rally, I can see the market challenging that, but I'm not seeing anything on the horizon that says, hey, this market's bottomed out and you're ready to go. Just the opposite. I think people that are scared in this market will bail on good hard rallies. That's what I'm expecting. Momentum is down. Is it oversold? In my parlance, it is. And the reason is any reading under 30 on the slow stochastic monthly chart, weekly chart, yearly, I view that as oversold. Anything over 70, overbought. So what I have here is a market in oversold condition, vertical price break, the market coming down. I expect resistance anywhere if it can rally up to the bottom of the lower Bollinger Band, which will change as soon as it opens tonight, all the way to the 18-week moving average of closes. The Dow isn't quite as bearish. It's only got 1 week under that Bollinger Band. It can have more, but on the other hand, it has the downtrend. It's had it in place with lower highs, lower lows, still breaking down. When we go to the NASDAQ, it's similar to the S&P, but even more classic. It got right up to the upper Bollinger Band, stopped its rally, and just let go in that vertical move. And I'm going to repeat. I think people think they're caught in this market. There's so much uncertainty. I think on good rallies, you're going to see those that are in it might want to liquidate certain parts of their holdings. When we come to the Russell, it's the most bearish. And just take a look. You can see how the market has been falling. It fell right into the support. This light gray line, and I'll bold this up when I finish this. This light gray line is the 200-week average. The first challenge of a 200-week average and or 100 often produces an area that the professionals take some money off the table because they're so important in what they do. A 200-week moving average is 4 years. I mean, just think about it as to what it is. And the 100-week is 2 years worth of data. That's why it's so important. Traders look at these. DAX, I told you I would cover some foreign. If you have another one you want me to cover, you can write me here on this YouTube channel, and I'll be happy to consider it. But higher lows, higher highs, this is the Gorilla Glue trade. And what this market did is it latched on, you'll see here, it's right through here, and just kept hitting, going over the Bollinger Band, coming back under it, and it's embedded at the same time. I view good breaks in the market under the Bollinger Band is where the trade will consider buying. I don't believe that they should buy over that band. Why did this come alive? Because Europe decided that they have to spend a fortune. I use the word fortune. We're talking trillions of euros, ultimately, on their own self-defense, because under Trump, he said, nope. I told you guys when I had office before, if you didn't pay your fair share into NATO for self-defense, I'm washing my hands of a lot of this. And they got the message. And that's their economic engine now. What can they produce? How do they convert maybe auto factories to do certain things that maybe they have too much production there? You know, you got to think the wartime environment. He's making them come to the table, and that's the economic engine for the moment. In the 10-year notes, and by the way, sometimes I'll put up this type of part here. It won't say yearly or not. You can just look over here and it's going to tell you if I'm doing it on the weekly or the daily or whatever I'm looking at. The trend is up, but everything I teach is when you get to the first run of a combination, first of the 100-week average, I expect that to be a resistance point typically. The Bollinger Band, most certainly, and that's what you've got. The trend is still up. The bias is up. The market is in a pattern of being overbought with the 71 reading. Pullbacks in the market are likely going to be finding buyers. That's my opinion on it. In the 10-year note, same thing. You got up to the upper Bollinger Band there and you're fighting. In the ICE, dollar index, now you're going to see the marches all go off the board tomorrow. This is a weekly chart anyways. But you've come down to an area where the market's stalling against the 100-day average and the Bollinger Band. If it can't mount a rally right now, then you've got to look at the 102 level. The 200-day average is the next target. Everything on this chart is bearish. The only thing it has going for it, if that's what you want to call it, is that the market is under the Bollinger Band and oversold. When we come to the euro, we have the flip-flop. 57% of the dollar index is made up of the euro. So the weighting here is the exact opposite. What I teach clients, let's assume, don't be short the dollar and long the euro. Be one of the two. You can play other currencies against the dollar, but because of the weighting in the euro, you always want to be careful. In the Canadian dollar, resistance should be right here around the 70.06.5 level, the 18-week average. You have what we call a bear market rally right now. You have higher lows, higher highs. It reverts into a downtrend, if not this past week, but the week before that. If you take out that low, then I could see the market going back to wherever the Bollinger Band is. Barring that, it's the battle to get up and see if you can stay over the 18-week average. I'm not convinced it will. As much as I respect Mark Carney, there's going to be another election soon in Canada, and he doesn't seem at this point to be the candidate of favor. We will find out, but certainly he'll have a better ear to President Trump than Justin Trudeau did. In the Japanese yen, I continue to expect the Bank of Japan to support their currency by cutting, well, not cutting rates, by cutting the idea of cutting rates and raising rates. That's what they've been doing. I don't see anything to stop it. Now, start putting your ear to the pavement. In other words, read. Why? All the major unions they're actually starting their negotiations, and we are going to hear how the pay is coming out. This doesn't look to be a real contentious year, so I think it'll be easy reading, and I expect that you'll continue to see buying there. But what would I teach you? Here's the 100-week average. Notice how the market got there, and it ultimately failed. Well, you're there again. Is it going to fail against it in the Bollinger Band? I wouldn't bet against it. Let's put it that way. In Bitcoin, what's supporting the market is the lower Bollinger Band. You're coming down, you're finding the support right there. Now, here's the differential between Brent and oil and WTI. And you can see it has slipped in. I like to look at this to get an idea, is Brent moving the world oil market or not? When you come to Brent by itself, look at how it fell down to the Bollinger Band and it's holding it, but there's nothing bullish here. This is still a bear market. It is oversold. That's the danger on the weekly chart. The same thing is happening in the NYMEX WTI. It went to the Bollinger Band area. That's where it's finding its support. Resistance back at the 18-week moving average of closes. Gasoline is sticking its head up. What's coming around the corner? Summer driving. So the market doesn't go down in front of that. It often starts looking for where's my lows for the summertime drive. And that's what I think you're doing right now. So you put it together, you try to come up with a game plan, and that's what I offer each morning in case you don't know that. And I do this I begin at 6 in the morning. And at 6, I start recording my futures videos. And I cover 40 charts of the major futures markets. At 9, I do one on the Spider ETF. I will talk to you fundamentals. I will talk to you what the market saw overnight. My charts will look like this. I use 5 indicators on them. You don't have all the things that I use right here that you see for free. And I put out specific. I want you to buy here. I want you to sell there. I want your stop here. This is what I'm looking at. My subscriptions include free access to my special reports. Remember, you only get 2 of those every year. So it almost pays for itself to just be a subscriber based on that. Just go to iraepstein.com, research. Everything's explained right on those pages, and away you go. I'm Ira. I'll catch up with you first thing in the morning. Have a great evening.